As the year wraps up, we're going to take a quick look to see who is BlackRock CEO Larry Fink. His name has now been a household name in the last couple months in the Bitcoin community space, as well as some of the traditional financial space as well. Thank you so much for checking the channel out today. My name is Agabus. This is your financial education channel. Let's get into it. We're over here at Decrypt.com. Decrypt's 2023 Person of the Year, BlackRock CEO Larry Fink. He wasn't always so bullish in his evolving relationship with crypto, what this could mean for the market, and why he is the Person of the Year. A Bitcoin ETF, which could open the floodgates for billions of dollars worth of institutional assets to flow into the market, has eluded crypto investors for more than a decade. It's been the most highly anticipated event in crypto since Decrypt was founded in 2018. But following rejection after rejection from the SEC, citing the potential for manipulation in the Bitcoin market, had been mostly written off as a lost cause. Then Fink and BlackRock changed the game, and in dramatic, completely unexpected fashion. In June of this year, BlackRock shocked the crypto world when it put its Wall Street weight behind a Bitcoin ETF, filing an application with the SEC for its iShares Bitcoin Trust. Fink then began singing Bitcoin's praises to mainstream audiences on national TV. The Bitcoin ETF odds instantly changed. You may remember on a video a couple of days ago here, BlackRock CEO Larry Fink said that Bitcoin is a flight to quality. However, Fink wasn't always so bullish in his evolving relationship with crypto, and what this could mean for the market is why he's the Person of the Year. It wasn't so long ago, after all, that Fink had dismissed Bitcoin as an index of money laundering, but we shouldn't get caught up on his comments from 2017. According to Adam Cochran, the crypto industry ought to applaud the fact that BlackRock is now willing to stake its reputation on diving in early to the space, and then not put Larry Fink on a pedestal. Well, who is Larry Fink? Much of Fink's early success stemmed from his development of mortgage-backed securities. More than a little ironic given the role that such assets played in the financial crisis of 2008, which itself had a profound impact on early Bitcoin adoption and lore. Leading up to the crisis, a growing number of mortgage-backed securities were backed by subprime, incredibly risky mortgages. When borrowers defaulted, the value of these securities tanked, basically becoming zero, and all the banks and firms that had loaded up on the mortgage-backed securities, lured by high interest rates, experienced devastating losses. Mortgage-backed securities, of course, is just a pool of mortgages where people were supposed to pay these mortgages back, and if they did not, the loan now becomes worthless because no one's going to pay back the loan if they don't have the money to do so. Crisis caused a collapse of Wall Street giants Lehman Brothers and Bear Stearns and the acquisition of Merrill Lynch. Although Bank of America acquired Merrill Lynch's banking business, it was Fink's BlackRock that acquired Merrill Lynch's investment managers in a $9.7 billion deal in 2006 that brought the firm's assets under management to $1 trillion. And 3 years later, they also bought the investment arm of British bank Barclays, bringing the assets to $2.7 trillion. That acquisition brought in the family of funds known as iShares, the index funds. The crypto industry now knows it well because of BlackRock's iShares Bitcoin Trust and iShares Ethereum Trust applications. Since 2009, BlackRock has been the largest asset manager in the world. The following year, the Wall Street firm managed or monitored upwards of $12 trillion. Currently, it oversees $8.5 trillion, a sum equal to almost half of the earnings of the 2023 Fortune 500 list. The firm is so large that Fink has assumed a CEO of CEO's role, publishing a letter to other chief executives each year. No big surprise, of course, that his 2023 letter included a section called Digital Assets. However, there's been some controversy along the way. For starters, there's the role that Larry Fink's BlackRock played in the financial crisis and a message inscribed in the Bitcoin Genesis block. Fink's BlackRock made two of its most critical acquisitions in the aftermath of the crisis, and around the same time, Bitcoin's creator Satoshi Nakamoto inscribed a line in the text that said, "The times January 3rd of '09, Chancellor on brink of second bailout for banks. It's a headline from the London Times about banks being bailed out by British government in the wake of the crisis. No official explanation was ever offered, but it's widely believed to underscore the first line of the Bitcoin white paper. Quote, a purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution, creating what some would say the pure commodity of money. That's not been lost on Ram, CEO of Luminda Wealth, an asset manager that specializes in alternative investments and digital currencies. Decentralized money is implicitly anti-institutional, and BlackRock is one of the biggest institutions of all. It's a delicious irony. The one resolution to all this is that BlackRock is a private institution. It's not a sovereign institution, and BlackRock has a mission to advance the investment objectives of private organizations. Until recently, Fink was an avowed Bitcoin skeptic, even as BlackRock tepidly embraced Bitcoin in 2021. Its chairman said during the interview, very little investor demand in cryptocurrencies. However, he had a full about-face recently. Mark Connors, head of research at crypto asset manager 3iQ, told Decrypt that Fink's embrace the world's largest and oldest peer-to-peer cryptocurrency is a full-throated endorsement. He was referring to Fink's comments on Fox Business that Bitcoin was digital gold. He calls BlackRock's pursuit of a spot Bitcoin ETF a coordinated effort to pave the way for a properly onboarded process to institutionalize Bitcoin safely and in support of a regulatory compliant manner. It's almost as if the firm wants to provide breadcrumbs for the SEC. And the industry is so optimistic about Bitcoin ETF approval that prices have soared this year. Crypto Twitter has been set ablaze by administrative updates and false alarms. Case in point, a few months back, the price of Bitcoin spiked 10% when a false report claimed that BlackRock's Bitcoin ETF had been approved. Fink later that week had said on Fox Business that it was false. Reporting and ensuing market moves is just an example of the pent-up interest in crypto. But the pent-up interest in crypto will have to wait a little bit longer. So far, the SEC has given itself an extension to make a decision on the iShares Bitcoin Trust application. And just like last week, BlackRock filed another amendment that showed signs the securities regulator has had extensive talks with the asset manager about risks, disclosures to potential investors, and what will happen to Bitcoin BlackRock has purchased if the trust needs to be dissolved. Analysts at JP Morgan have said there is a 90% chance a Bitcoin ETF gets approved before January 10th. Also, the Coinbase CEO Brian Armstrong said he is also pretty optimistic. I'm a little bit curious on all of these exchanges. If traditional finance gets into Bitcoin with spot ETFs, what happens to the onboarding with normal exchanges, again, like Coinbase? Let me know your thoughts in the comment section below. Bloomberg Intelligence ETF analyst James Seyffert has said that the window now is in January, from January 8th through the 10th, and to mark your calendars, he told people on X. Thank you so much for listening all the way to the end. Curious on what will happen in the next couple of weeks after the holiday season. Thank you so much, as always, for listening to the end. If you like what you heard, please share it with somebody else who may find it of interest. As always, stay inquisitive, stay informed, and stay subscribed for more. We will see you tomorrow.